I haven't recorded a video in I don't know how long, so I figured this pretty clean Asia setup would be a nice restart. Not restart because this may just be the last one that I do. I don't know. Um, but just something to kind of uh be like a bookmark of like where I'm currently at with my approach, my strategy, my model, whatever it may be. So that if something happens down the line, if I get in a slump or I'm just like, oh fuck, like I'm strategy hopping for whatever reason, I just come back to this video or another video, whatever it may be, and say, oh, I was doing this. Okay, cool. I'm just gonna stick with this. So here is an Asia trade that I took literally a couple minutes ago. I took two trades. One right here on this buy inside of this fair value gap, and another one here at this fair value gap that ended up running about 6 points here and like 15-ish points here. So I'll just go over on this screenshot here, the breakdown, and then I'll go to the actual chart. So starting out when trading Asia, just mark up your initial buy side and your initial sell side liquidity between 6 p.m. and 7 p.m. So you just want to mark out the high and the low of that time range. Once you have that, you want to give price some time to play around, meander, find its way through price, see what it's looking for within like those first 30 minutes or to 45 minutes of that 7 to 8 hour window. So once that kind of starts to facilitate itself, then you want to come to the chart with your approach. How I come to the chart is saying who's been making money. So from this open at 6 p.m., who has been making money, right? If I put a buy order at the 6 p.m. open, or if I put a sell order at the 6 p.m. open, which order will be in profit? So if I put a buy order here at this 6 p.m. open, I'd be in drawdown because we dropped significantly, made a low, came back up into this gap over here, and then dropped again and kept dropping. So I know if I put buy order, I'll be losing. If I put a sell order, though, I'd be in some significant profit, depending on the sides and whatnot from there. So I would be in profit. So I'd be selling. Stops would probably be above this high. I'd be selling here. Maybe I'll sell a little bit more there. Boom, significant displacement. Be in a little bit of drawdown or at least pulling back here. And then, oh, fair value gap order block. I'll take another trade, sell stop, and, stop loss above this high and continuing and whatnot, blah, 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 so on and so on. Now, once I get that idea in my head and I say, okay, from 6 p.m. open, I know that sellers have been making money. I know that buyers have been getting shit on. And it's time for them to see if they want to make a move. Now, what I look for in a buy setup, I would need to see the initial sell side to be taken out first. Now, in this setup in particular, the initial sell side is still intact. What I saw that made a lot of sense and that I've been seeing over these last couple weeks is that if price fails to get to a significant sell side liquidity pool or a low that it's in close proximity with, that right there is bullish. Why? The reason as to why price fails to get to a high or get to a low lets you know that it has to get somewhere really fast. For example, up here, we had this high formed. If we were truly bullish, price will take out this high. But because we're bearish, we put in that failure swing, right? Because we're bearish, price is showing weakness. Price is showing that it doesn't have the strength to push up to this high. Vice versa for lows. Down here, yeah, we do run some sell side here, but if we were truly bearish, we should have seen some significant speed after running out the lows here because we know that there's liquidity under there. We can run out these lows and then tag this because it's in close proximity, right? But because we don't, because we fail to run to the initial sell side. Because we flip this fair value gap here, turn it into a balanced price range. Some will look at it as an inverse fair value gap. I just look at it as a balanced price range because this price range would be balanced. Single sell side move here, single buy side move here. This is a balanced price range. Price doesn't need to come back here. And we see immediate speed and displacement to buy side liquidity. So that's just there in it of itself. The reason why I took this first trade is because I saw that just a little earlier. As you can see, we have consolidation, sell side here, price sweeps it. So I'm looking at it and I'm like, okay, cool. We just took out this low. Can we fill in these gaps here? Okay, cool. Boom. We fill it, showing speed and displacement higher, shifting structure here. So now I'm like, okay, cool. If I can get in below this low here, inside of this fair value gap in this order block here, I'd be good. I'm a happy camper. Boom. I place my buy, put my stop loss below this low, and I'm targeting these highs, and these highs. What ends up happening? Price displaces significantly down straight to my stop loss. So now I'm like, damn, okay, cool. Let me just go back to protocol, go back to searching for the initial sell side liquidity pool to get taken out. Well, what ends up happening? We only took out this sell side liquidity. Price fails to get down to this sell side, the initial sell side, which shows bullish because it's failing to get down to a discount. Price is running below a sell side liquidity pool and showing speed and displacement higher. So we start to build the dealing range and forming your low, your rejection block, your order block, your balanced price range, your fair value gap as we are on our way up. So as I'm seeing this move play out here, I'm not getting eager. This was a 4 contract trade. I put on 4 contracts. So immediately put it to 2, cut my risk in half, said, all right, cool. If I get a trade, I get a trade. If I don't, I don't. So price rallies, pushing up, and I see this fair value gap here, and I'm like, okay, I do see this inverse fair value gap here as well. So I just went up to my higher time frame, my 5 minute, my 2 minute. I was like, all right, let's see what price is looking at the time, and I'll show on the chart. There was a 5 minute fair value gap. And I know that if I'm using my 5 minute fair value gap, I want to find a PD array on the 1 minute that's in the upper half of that 5 minute fair value gap if I'm bullish, right? So I'll go to the chart and show that in a couple minutes. That's where I got this 1 minute fair value gap. Once I got this 1 minute fair value gap and I saw the run below this low, I took my buy with 2 contracts, and I said to myself, I want to be able to take 1 contract off above this high and this high, and then leave the rest for whatever happens. Sure enough, that's what it did. Got in here, created another inverse fair value gap or balanced price range here. I look at this as a breakaway gap. I wanted to see price continue higher, created another fair value gap there, coupled with that 1 minute order block, showing speed and displacement once we got above these relative equal highs here to this next buy side liquidity pool, ultimately targeting this new week, this new day opening gap and the initial buy side. All right, so that was what I wanted to see. So going to the chart, you can see this is what I was looking at. Let me lower this. So this is what I was looking at here. So I'll go to a 5 minute real quick and just show. So this was the 5 minute fair value gap that I was looking at. As we can see, I'll just put this as this. Okay, so this is my 5 minute fair value gap. Disregard FFP, but this is my 5 minute fair value gap. If I'm bullish, I want to see PD arrays that are in the upper 50% of this 5 minute fair value gap get respected on the 1 minute, right? So if this is my 5 minute fair value gap, I don't want to see price come down into this fair value gap down here. To me, that's showing that it's not as bullish as I need it to be. I would want it to stay above the 50% of the 5 minute candle, of the 5 minute fair value gap, and show a willingness to be bullish, show a willingness to push higher. And that's what I saw here. So disregarded, took that 5 minute fair value gap off. And then was like, all right, cool. I'm going to take my trade here on this 1 minute fair value gap. I'm confident. I'm pretty good with my risk. My risk is fine. I feel good. I feel confident. Cool. So then I took my trade here. You could see the execution. Call it 22.92. 22.9225. That was the exact point. And then my stop was underneath the consequent encroachment of this balanced price range. Why? I put my stop below this balanced price range here because I know that with this being my order block, these last four down candles before the up move being my order block, I want it to work if it needs to, right? I want the 1 minute order block to have, its line of defense before it gets to my stop loss here in the balanced price range. Ultimately, if we were to have flipped this 1 minute fair value gap and started to get down into this 1 minute order block and then started to play around this fair value gap, I know that, this trade isn't for me. This is, goner. It's, just cut your loss early type of thing. So I put my stop here below the consequent encroachment of this balanced price range with the intent to push price higher. So this was like a 1 to 2.5, which is solid, pretty good. So my first partial was here at 22.98.5, right there. So 1 to 1, nice and easy. Got my risk off of the table. Once I got that risk off, boom, stops got moved to break even, left open this breakaway gap here. So I knew, okay, I have some, lines of defense below me. I have this breakaway gap and I have this fair value gap that price can use as support. So then I targeted this. Now, as price is developing, as I'm seeing price play out, I note this 1 minute fair value gap. I mean, yeah, I note this 1 minute fair value gap here, and I note this 1 minute order block. Seeing that price is failing to close below this 1 minute order block and close below this buy side liquidity pool lets me know that this is bullish. This is not looking to trade lower or go to any discount or raise. It wants to get to where it needs to go, which is the buy side liquidity pool up here. Ultimately, I want to see this initial buy side because there's some relative equal highs over there, but that's neither here nor there. We're looking inside of the range. Now, I took my second partial here at 22.107. What was that? 25.75. Right there. Second partial was right there. Pretty much got out right around as the price was closing. For 15.5 points, which is solid. This was a pretty good trade. This should have been the first trade that I took. But I did see this. So I'll show this too. So that was the win, and this was the loss. So here, as we can see, it looks pretty similar, right? So you got your high, you have a lower high, price starts to consolidate. Boom, you get your sweep, you get a run below sell side there. Lo and behold, you get a shift in structure here. You have this gap here. All right, so this is my 1 minute fair value gap that I'm looking at. And what I did was I wanted to see if we could get below here, and I took a buy. So I took a buy somewhere around here. I'll be sure to show it. But I took a buy with 4 contracts. So I was a little over leveraged. It is Asia, and I know that the sizable moves don't come often in Asia. For example, this from this low to this high up here is only 26 points. Now, 26 points may be a lot, but 26 points is pretty much nothing compared to the New York or the PM session. So, when I'm risking like 7 points, like I could afford a 4 contract size. with that being said, I took my entry here inside of this 1 minute fair value gap, looking at this breaker over here, right? It isn't really, visible, but I know that one of these up candles is supposed to be a breaker, essentially with the concept in mind, looking at it like how it's supposed to be looked at. You have your low, you have your high, lower low, higher high, breaker setup right there to push higher. Essentially, that's what I was looking at. But price ends up pushing lower significantly. Once I got there, I was like, all right, cool. I'm getting prices, heavy. We're leaving open a fair value gap. We're filling in, fair value gaps. We're leaving open SIBIs, filling up BISIs. So I'm like, all right, cool. I'm just getting out. I'll take my loss. And then lo and behold, it ends up, shooting even lower. So I'm like, all right, cool, no worries. Um, Looked away, called my girl, made sure everything was okay. As I was talking to her, I was like, oh shit, I forgot I was looking at Asia. And then I see that price is like somewhere up here. I'm like, oh damn, I missed my trade. I'm like, oh, let's wait and see what happens. Boom, price taps that. I'm like, oh fuck, I missed it. And then boom, price taps again, and I get in. I get in right there, and price starts shooting. We gap up. We leave open that breakaway gap. If I was still bullish, I would have left this open as a fair value gap to see if price can trade down into it and then push higher. But since I got in here, I made sure I took a partial above this high and then moved my stop to break even to save myself because I already took that initial loss. So the initial loss was like 400 bucks. Once I took this partial, it had moved down to call it 400 minus 120 is 280. So it got moved down to 280. And then once it got moved down to 280, I put my stops to break even. Because that then with a 50K account, that'll be about 0.5%, a little bit over 0.5%. So I'm like, all right, cool. I could live with that. Let it price run. Price leaves open this fair value gap here, shows willingness to stay above the buy side liquidity. And then we get a gap down and out. So we gap down into the buy side liquidity pool and, above this 1 minute order block. And then we show speed and displacement out and away. And boom, boom. I didn't take profit there. Didn't take profit there. I took profit here. I was looking to see if we could run up into here, but because I was up, because I had a position in here, I moved my stop super aggressively. I didn't want to, move down below break even at that point in time. So I just said, you know what, don't be greedy. I already took a loss. It's late. I have to do homework. I'm just gonna get out. Um, and boom, yeah, I just got out at that high, and then price ends up, spiking up to that new day opening gap. And right now, here we are. So still want to see if we could reach the initial buy side liquidity pull up there. I'm pretty sure, pretty confident we can, especially with this gap up here. Um, but yeah, I'm pretty happy with the executions. The first execution is not a bad one. It's literally the same exact one I took the second go around. So I like the fact that I'm confident in my setup, so I'm confident in myself. Um, More so to say, okay, I shot the ball at the same spot, the top of the key, and I missed it, but I'm gonna shoot it again, because a shot's a shot. You know, I trust myself in knowing that, okay, I took this loss here on this setup, right? When if I see the setup again, I'm gonna take the same exact setup because it makes sense. It lines up with what I'm looking for. So if this would have been a loss, then I would have had, to deal with it. But the fact that it ended up being a winning trade, um, same emotions apply. You just got to deal with it. Just got to take note, say, okay, cool. Um, but yeah, that was pretty much my rant. I know I've probably talking a lot, but I haven't done a video like this in a minute, so bear with me. Um, but yeah, other than that, this is pretty much it. Um, I've limited my trading to only Asia and New York. In the AM, I took out PM session. I don't really trade PM. There's not much really. Let me not say that, but there, I it's just easier for me to just look at AM and Asia, the two times that I have a little bit more time to look at the chart. Um, but yeah, other than that, things are going pretty good. School is going good. This account is going pretty good. Up 4%, only 2% away. So if I didn't take this initial trade and I put four contracts here, I would have passed the account. But, you know, there's lessons and there's, things that still need to be learned. So not mad at all, grateful for it all. It's Christmas time, so Christmas is next week, so I may want to limit things to the point where I kind of hold off a little bit. But if I can pass it this week, great. If I don't, and if I fail it, cool. That's just what was in the cards. So can't complain either way. I'm grateful for a full 2024, being alive and experiencing it. And hopefully, let me not speak in hopefuls. I know that 2025 will be an amazing year, all around, in business and school and life, and family and friends and all of that good stuff. So, other than that, I'm out until next time, which may be in the 2025 year. I'm out of here. See you guys.